Okay. Again, it is my pleasure to be here. Okay. This morning, as usual, I will guide you through some market outlook pertaining to econ, some macro stats. After that, I'll also be sharing with you some investment teams, some stock ideas. Okay. But before I start, let us do a quick review on 2017. Okay. It was a good year, I must say. Okay. If you look at KLCI, overall it was up by 10%, close to 10%. Okay. But when you look at the trend, 2017 was actually a year of two halves. For the first 6 months of the year, KLCI had a good run. But subsequently, it went through a stage of consolidation, which lasted for months. And it was only until the very last few days of the year where the CI started to rebound strongly again. Okay. So against these kind of volatilities, how should you position yourself in 2018? Okay. So I think that I hope my presentation helps. Okay. After this session, I hope you will be able to make a more informed decision when it comes to investing in stock market. In 2018, Malaysian economy is expected to stay resilient. Our economists predict GDP numbers coming at around 5.3%. Okay. This is slightly slower than the 5.8% achieved last year. Domestic demand will continue to be strong because of consumer spending, because of public expenditure, the government spending. Likewise, if you look at export imports of goods and services, we would expect them to continue to expand, and this is basically premised on the resilient global economic outlook. If you look at this chart, I hope it is clear. Okay. Basically, if you look at the quarterly GDP, it hit the low of 4% in second quarter of 2016, but it has since steadily edging upward. Okay. If you look at the quarter of 2017, the GDP was at 6.2%. So the key story of this thing is, generally, Malaysian economy is still quite healthy. Just now I talked about consumer spending. So some of you may ask, how can consumer spending contribute to economic growth when everyone is complaining about the high cost of living? Okay. You can look at this chart. Okay. It shows you the consumer spending pattern since 2013. So basically, it covers the spending pattern before and after GST implementation. No doubt, when you look at the consumer spending pattern, it actually fell to a low in second quarter of 2015. But shortly after that, it actually rebounded quite strongly. Okay. And of course, when you talk about consumer spending, it does not only cover the local consumption, it also covers the spending by tourists. Locally, there are quite a number of initiatives undertaken by the government to boost consumption. If you take a look at the 2018 budget, first of all, the Bring Cash handout is still there. 6.8 billion ringgit is still the same amount, but we cannot discount the possibility of an upward adjustment. Because bear in mind, oil price has rebounded, therefore government revenue has also increased. So they have the capacity to pay higher. Secondly, if you look at the civil servant side, the salary adjustment, the bonus, this year so much higher at 3.3 billion. Okay, last year was only 1 billion. Third positive thing is, if you look at the 2018 budget, there will be a 2% cut in tax rate this year. So all these three measures basically will help to boost disposable income, and therefore you will be able to spend more. Of course, when you look at the budget, there are some setbacks. First of all, will be your EPF contribution. Okay? Starting January onward, your contribution to EPF will return to 11%. Okay? Secondly, when you look at the interest rate, we do expect a rate hike somewhere around March this year. But all in all, when you look at the 2018 budget, we see more positives than negatives. Another point that I would like to highlight is that if you are looking at timing, okay, in terms of consumer spending on spending first half will likely be stronger than the second half. I'll give you some reasons why. For bring cash in out, almost 2/3 of the cash will be distributed before June. For the civil servant part, the bonuses, the salary adjustment, again, it will happen before June. Okay. And lastly, next month, Chinese New Year. Usually, consumer spending on festivity are always higher. So again, when you look at first half, second half comparison, there will be more activities in the first half of this year. On tourism side, I think there are two things that we can track. One is the tourist arrival. The other one is the dollar and cent they spend in Malaysia. Okay. For those of you who have access to Tourism Malaysia website, you will notice the tourist arrival to Malaysia has actually dropped up to August. Okay. But if you exclude travelers from Singapore, the visitors arrival actually went up by about 2%. Okay. But more importantly, when you look at this chart, the spending by foreign credit card holders have actually picked up by close to 20% up to October, January, October last year. So in other words, what we are saying here is, yes, the travelers may drop, but we are actually attracting the higher quality travelers, which are more willing to spend. And that, to me, is more important than the tourist arrival. Higher government spending is another reason why domestic demand is expected to stay healthy. Okay? Because oil prices have recovered, government has actually had more so-called bullets to spend. Okay? Generally, based on our sensitivity analysis, for every $10 increase in oil price, government revenue will increase by about 4 billion ringgit, and that is excluding Petronas dividend. If you include the Petronas dividend, the amount will balloon to about close to 7 to 8 billion. So that is a lot of money. And also, if you look at the investment side, I think this is also another key to drive growth. For simplicity, I'm just showing you the infrastructure jobs award. For those who can look at the chart, 2016 was a record year. More than 100 billion of jobs being awarded. We are talking about just infrastructure jobs awarded. But come first half of 17, I think the numbers have actually fell significantly to about 10 billion. Okay? But to us, there's nothing to worry about because we would expect second half to catch up. If you can remember, last year, second half, we basically saw the awards of a lot of contracts related to LRT3, some parcels of MRT2, as well as Han-Molino-Sabah highway. Okay? All these will contribute to the numbers in the second half. Okay? At this moment, I think we do expect the numbers to normalize to around 35 billion region. Okay, what about overseas market on the macro side? This slide shows you the composite PMI for some key continents, covers the G3, the US, Europe, Japan, covers the East Asia, as well as the global PMI. The key takeaway here is, if you look at the three lines, they are all above 50. Okay? And that basically signals that these areas, these regions are still expanding. And this will actually lay a foundation for a stronger growth in 2018. So what about interest rate expectation? Okay. I extract these slides directly from Bloomberg. Okay. It basically compiles expectation from various economies in the world, not just Malaysia, but also in the US. Right now, if you look at Fed fund rate, it is around 1.25 to 1.5%. How to read this chart? Unfortunately, you can't see the mouse. Basically, quite a number of them, close to 60-70% of the economists predict a rate hike somewhere around March. minimum 0.75% of minimum 0.75%. Okay, starting on March. Okay, so that is the key takeaway. For us, we are also expecting, Maybank, we are also expecting 0.75%, and this is actually in line with the guidance from Federal Reserve. In Japan, in Europe, however, we do expect the ECB, the BOJ to keep interest rate unchanged. When you talk about monetary policy, I think money supply is another element. Okay? And this slide basically gives you an overview on US balance sheet reduction program. I think if you look at the balance sheet reduction program, it was started back in October 2017. Okay? Based on what we have, after one full calendar year, one full 12-month cycle, there will be a total of $340 billion eliminated from the Federal Reserve Board. Okay? So that works out to be about 7 to 8% of their total balance sheet. Before they trimmed down the exposure, the outstanding was around 4.4 trillion US dollar. What about Europe? I think officials in Europe are also looking at QE. But unlike the US, I think the momentum is a bit more moderate. Okay? They started off with an asset purchase program of 80 billion euro. Right now, has dropped from 80 to 60, 60 to 30. And more importantly, when you look at the statement by the president of ECB, he said that there is no rush to add QE paper. So in Europe, basically we are expecting a more moderate tapering. Okay. For oil, I think everyone knows that there is a pact between the OPEC and non-OPEC members pertaining to output cut. I think if you look at the latest number, it seems like the oversupply issue has been addressed. Okay? The output cut did help. Right now, instead of oversupply, I think demand is slightly higher. Okay? And because of that, oil price is now on the way up. Brent is now very close to $70 per barrel. Okay? And this will actually benefit countries like Malaysia because we are still an energy exporter. Of course, I painted a very rosy picture for 2018, okay? At least compared to 2017. But it is also my responsibility to show you some of the challenges lying ahead. If you look at 2018, most of the risks are actually related to politics and policies. Of course, some of these are actually inherited from 2016 onward. Okay? This year, there will be few key events that you should monitor. Election is definitely one of it. Okay? Unfortunately, the text is a bit small. If you look at the statement that I put up, this year there will be election in Russia. This is somewhere around March. Italy, Malaysia, Thailand, and more importantly, you have the US midterm election, which is somewhere around November.